Today, we're covering the critical Federal Reserve interest rate decision with Danielle DiMartino Booth, CEO and Chief Strategist at QI Research and a former Fed insider and a frequent guest on our show. Danielle, welcome once again.
And thank you for having me on this Fed Day.
I would have to say that, wow, that was a bit of a surprise in what the market thought we would expect. So, what do you make of, the big news?
Well, I think that it's not usual for the Fed chair to drop kind of the big breaking news in his formal comments. So that was what first really threw markets off guard. He didn't even wait for a reporter to ask him the question about whether the December FOMC meeting was going to be live before he said in his statement that it was far from being an in stone decision, and that really is what set markets off this afternoon, along with the fact that we had a hawkish dissent as well. It almost seemed like it was perfectly choreographed to me, and I think that we'll all be on tenterhooks in 3 weeks when the minutes are published to see whether or not Kansas City President Jeffrey Schmidt had any other people who were leaning towards not cutting rates at today's meeting in October.
It was really a surprise, as you point out, that he didn't even wait for a question. He led with it, and you get a sense that that wasn't his view. But could you say that he's trying to get in front of something? Because once the blackout period is over, that maybe more members of the FOMC will come out against moving, and says, I need to get in front of this. It certainly had that feeling, didn't it?
Well, it did. Again, there was something today about the press conference that felt very planned, very choreographed, all the way to the very first question from the Wall Street Journal being about the definitiveness or lack thereof of the December meeting. And he made a point several times, even though he was talking about weakening in the labor market, but he certainly did want to drive home the point that December is a live meeting. Even though we know right now that there are not enough resources at the Bureau of Labor Statistics, even if they were to come back to work tomorrow to put together the October CPI report.
Oh, wow. So there's no more CPI, but probably between now and the December meeting.
I think that it's going to be very difficult for the Fed to get anything but the October inflation report before the December meeting. We will have to see. But again, that's going to push us behind. And it's actually, you know what, Ty, that's a complete unknown. We don't know what the BLS is going to be able to produce once once everybody's back in their offices. We can't even talk about when we know the shutdown's going to end. So in many ways, the Fed is flying blind. And because of a speech that he made recently, because of some of the other comments that Fed officials have made, talking about alternative data sets, gauging the strength of the job market, which have all universally weakened, I think that was really what surprised the markets the very, very most, is that he was effectively dismissing, by referring back to the August unemployment rate, he was effectively dismissing the full body of data that's come out subsequent to that last payrolls report. Very, very surprising. Very surprising.
The other thing that surprised me, and this wasn't so much scripted, and maybe it was the first metaphor he could come up with. He comes out towards maybe the middle or the second half of his comment, saying, well, if you're without the data, if you're driving through fog, you would drive more slowly. And that seemed to reinforce, so you're going to wait in December. I'm not sure, where did that come from?
Ty, I'm not usually one who is lost for words, but at this point, I am lost for words. We had General Motors come out just as markets were closing with news that they're going to be laying off 2,900 plant workers indefinitely. They're laying off 5,500 in total, but some of them are hoping to come back in 2026. GM left a big question mark out there. But again, this was yet another large layoff announcement that is on the heels of a string of layoff announcements in the month of October, not a seasonally normal month to see the magnitude of job cut announcements that we have. And yet we are tracking in October for the second highest number of announced job cuts in the last 2 years. So I think market participants, just listening to what my institutional investors were saying in my Bloomberg chat, they're completely mystified at exactly what he is or is not watching. It's as if he's been cut off from news flow.
He did say, and I did see some of the markets bounce when he said it, that we're watching the layoffs very closely, because towards the end, somebody specifically asked him, we're seeing all these Amazon layoffs. We are watching it very, very carefully. And, it was certainly surprised. I think a lot of people expected this to be a nothing burger, and it was really, really, really far from it. And this is a little bit towards the Mrs. Lincoln, how was the theater kind of question. But outside of December not being a foregone conclusion, were there any other messages that were a little lost in the shuffle? The end of QT, anything. He talked a little bit about wanting to bring down the duration of the Fed's Treasury holdings to a shorter duration. Any other messages that we should take note of?
Well, he did note that he wants for the Fed's portfolio to more closely resemble that of the composition of the U.S. Treasury Department. And that's perfectly intuitive. That's always been, even before quantitative easing even began, when the size of the Fed's balance sheet was not even $1 trillion. Now we're talking about $6+ trillion. Even then, the Fed was always kind of mandated to have Treasury holdings that were along the same maturity spectrum as that of the U.S. Treasury. That wasn't what was surprising. And I actually was pleased to hear the news that they are going to continue to roll mortgage-backed securities off the balance sheet even after they stop the roll-off of Treasury securities. I'll get in trouble for saying this, but people might be starting to make rumblings that if the Fed is going to take $35 billion a month in mortgage-backed securities proceeds, as we see refinancings pick up, which we have. So prepayments of mortgages will increase, allowing the Fed to roll more off of its balance sheet. But I can only imagine what my Twitter feed is going to sound like once people actually stop and do the math and realize that the Fed's theoretically going to be having $35 billion a month in mortgage-backed securities roll off that they're then pumping into the Treasury market. So while the size of the balance sheet is not going to change, some could certainly construe, at least, the Fed's going to be supporting the Treasury market by taking money out of one pot and putting it into another.
Yeah, that is strange, right? You're going to support the Treasury market and sort of let the mortgage market fend a little bit for itself. And it just got a little bit of a surprise, because I think people were really banking. I was just looking at Fed funds futures, and it went from a 90% chance of pricing a 90% chance of a December move to now it's almost a coin flip.
Yeah, it is right now. Right now, we are at a coin flip, and as the markets were closing, the 2-year Treasury was at its high yields of the day, up 11 basis points in one session, which is really an extraordinary move. And that is markets beginning to price out the possibility of a December the 10th rate cut. It will be very, very interesting. Stephen Myron, notwithstanding, who dissented for a 50 basis point rate cut. I don't mean to be dismissive of Mr. Myron, but I don't think that many market players are paying attention to him anymore. He's shooting dissents into an echo chamber, if you will. But I will be interested to see what the other members of the committee have to say in the coming days, given that they do represent individuals across the country. And in light of all of these layoff announcements that we're seeing right now, it'll be interesting to see how they answer questions at the podium, I dare say, once blackout ends.
You mentioned the big move in the bond market. The stocks have barely moved, which is surprising at all-time highs. Perhaps that's because the big five are reporting, and they're probably going to beat, and Trump and Xi are apparently going to finalize at least a trade truce, a few hours from now. But what do you make of the stock market so far just shrugging this off?
Well, Ty, I mean, there is something to be said for the intractability of inflows into the stock market. When you have a day like today with a stock like Nvidia, which literally, as a single $5 trillion market cap stock, is the main beneficiary of inflows, automated inflows from 401ks into the stock market, it's very, very hard to slow this train down because the largest capitalization companies do benefit the most from those passive inflows. And in fact, I don't think we ever saw the NASDAQ during Chair Powell's comments even blink, basically, at what he was saying.
It is interesting though. Gold and silver, well, silver less so, but gold has retreated almost 1%, and it was having a nice little bounce. But you figure that suddenly if we have a pause, it seems that Powell tried to save it, saying, "Oh, we will cut again at some stage." It was sort of trying to a little kick save on the on the gold there, but it might not be good for precious metals if rates aren't on the way down as people expect.
I mean, that is certainly the theory, but of course, we're also seeing quite a bit of the over enthusiasm come out of precious metals right now, as individuals who were not kind of natural owners look for a place to hit the exits and look for the next crazy stock speculative move.
I'll put you on the spot, Danielle. If all things being equal, right now we don't get any significant data one way or the other, and not official data, but I noticed that ADP is now doing a weekly report instead of their monthly report. Right now, all things being equal, does the Fed move in December?
Well, it's interesting because I kind of sensed where you were going with that question, and ADP is exactly what popped into my mind. ADP is going to be, now that we actually have a rolling 4-week tally of employed Americans, ADP is actually introduced to us a very, very valuable tool that policymakers can fall back on and use, that tracks layoffs in real time on a week to week to week basis. And because the first print that we got from ADP was timestamped October the 11th, by the time they report through the end of this week, through Halloween, we will definitely have seen some serious deterioration and weakening in that ADP data, in addition to what we're going to hear about from the layoffs themselves as that data are tallied, to say nothing of the headlines. We forget that the last time that we had ADP's monthly numbers, that the only thing that was propping them up was the largest companies in the United States and their ability to continue creating jobs, even as small and mid-sized businesses were shedding jobs. Well, guess what, Ty? Everything we've heard over the last few weeks has entailed the largest companies pushing through with very large layoffs.
If it stays sort of steady state, do we get a cut in December? Does this Fed give us a cut in December right now?
I think that it's going to depend on the flow of data. It's going to depend on whether or not any official channels open up at the BLS. If the government shutdown ends, there are so many if contingencies at this point. But again, Chair Powell in a 2019 speech specifically referenced ADPs at that point. It was every other week that it provided data to the Federal Reserve, but he referenced that in 2019. Governor Christopher Waller also referenced that in his most recent speech this year in 2025. So it would be very awkward, if you will, if the Fed was to begin dismissing an alternative data set that it previously had already basically sanctioned. So we'll have to wait and see, Ty. But if the headline tide does not turn, if we continue to see seasonally low increases in trueflation, for example, trueflation at this time of the year, which is a real-time blockchain, 30 million prices tracked every single day across the United States, while it's bounced off of its lows, as is typical for this time of the year, it's not up as much as one would have anticipated, as we see that drag from shelter inflation that the Fed knows exists. You just saw S&P report home prices in the United States were rising at the slowest pace in 2 years earlier this week. I mean, unless the Fed is going to be purposely blind to the data, they've got upwards of 800 PhDs who they can put the pieces of the puzzle together just fine without having official data.
So it sounds like they should cut, but whether or not they will be a bit of a coin flip. Well, Danielle, thank you so much for joining us today right after the Fed meeting. And we look forward to speaking to you again soon, probably after the next Fed meeting. Thank you so much.
Take care, Ty.